Welcome to TradeTheMBI.com. This is John. This report is for the 29th. Well, next to the last day of the month, and so that should be interesting as far as end of month. Play around with numbers and that as some of the larger funds think about rotating into various sectors, and that always gets to be a little bit more volatile as you approach the end of it. And then usually by the 5th of the month, you get new inflows from all those wonderful contributors to your mutual funds and their 401k plans, which tend to provide all sorts of liquidity. As we look at the S&P, so quite a mix, so pretty healthy overall. And we saw a little recovery even after some of the selling that took place early on in the day. Came back relatively strong. And yes, people will associate it with this. And that was interesting too, because we started the day with this same cyan candle, and so it was interesting because the expectation is you'd be looking for an improvement, but it wasn't looking so good during the early part. And then we had the turnaround signals that came, and boom, popped back up. Now, is it still a sell signal? Yeah. You can see the red still declining, but what you had is the steel moving higher. At the same time, cyan was moving a little bit lower, and that was enough to give you a little bit of a recovery boost from there. Still not that great as far as a reading. And here's what's interesting. If you go back to like right over here where we had this separation, I tend to give you the little rectangles here that show what we call the DOC spreads, where it starts to break down when you have these rising. But really becomes super intense when you get the cyan and the steel up here above that zero line, and then you have the other three down below this -7 green line here. And you can see now the potential is that steel is moving higher, and you're going to have that separation with the three of these below, and that potentially could get ugly, at least from a decline. It's not necessarily ugly if you're on the right side of it. Now here you can clearly see it defined nicely on the NASDAQ, where you have the two of them up there. And you can see the last time it occurred, you ended up with what seemed like a nice potential rally, but no. When you get that kind of separation, you always see me want to get my little rectangle tool out. And we can follow it. I mean, despite the up and down in here, this has not changed as far as directional. You've had a couple of close points, but from its initial breakdown right over here, you're still making lower highs in general. Now, that doesn't mean that we still don't get little pop signals with the turn up in that we can take advantage of, and that's fine. I mean, particularly when you have a lower low on the rising, and then we were also made the lower low after having the deep red dip down. I think it was pretty clear on the ES there with the same situation. But we'll see it from intraday. You end the loop, and then we look for a little bit of a retrace. We were looking for somewhere right around here, low of 1840-ish, and we had 1844. So while not perfect, pretty darn close to what the expectation was, given that configuration. So I know, what can I say? And actually, you know what? We were talking about this because the expectation was, might as well revisit, we were looking for about 50% of the move. And yeah, there you go. All right, so not a Fibonacci reset, but a institutional buyer construct. So it's pretty interesting to see that. Doesn't affect us one way or another. Likewise, we have the YM, and it's starting to turn around with the curve and improve in the extreme, but still not completely turned around. Not at all. In fact, we should look at the while we're taking the time. Price oscillator, market's been in a buy here from MACD buyers. They just took a huge decline in there because they don't understand this concept of how the market really works. They're just looking at some moving averages there. Price oscillator dwindling almost below the -50 there. That would create a potentially nice bounce, but that's still weak in negative territory. Nothing exciting about those readings. And that may just generate some sideways action. Look at, you can still see USOs not in a buy. So not looking for any excitements there. Gold, actually, nice conversion coming up from the dip. We would need to see the steel get out of that no spark zone, but unfortunately for it, you would have needed also the green to continue higher and that steel. So when you start to get this crossover and you have your long expectation building, you've got to get that follow through with the cyan moving below the green. That's part of that 1, 2, 3, 4 construct that we typically look for in the crossovers to get yourself a nice move. I had some people tell me I was nuts that X was not going lower. We had the deep red dip below the red line, so the expectation earlier is that this little pop was not going to survive, and once we had the breakaway, that distance too far, there was no way that those two were going to connect, and now you actually have steel moving below the cyan, which is also negative, and you can see that beautiful separation of the two. It becomes more and more noticeable, and this is the whole point, that I try to give to you overall, is that as you start to notice these simple constructs, it becomes rather obvious when you're looking at a chart here and you see CLF. Fine, moved into that buy, but that spacing is going to have to change dramatically, and the fact that you're in the deep red is not going anywhere at this particular point. Don't get too excited about that one. AIG doing fine, holding up well within the construct. Just now getting to be an interesting concern here at the peak. Retested the dip below the red line, fine. Steel had moved all the way down here into the safety zone, which is good, because now you have cyan moving back above zero and about to potentially roll over. Not too worried about there. You just stick with your rising stop from that original move. Also gives you an opportunity at that point to kind of sell out of the money call in those types of situations. If you're in a sell signal, like, well, right back over here, we talked about this with WLT. It came up on the 78 minute, put in a perfect DOC spread for a sell signal. So my expectation for it was it to come back and retest the dips below the red line, which were some down here in the 730s. So that was a perfect opportunity to turn around and sell an in the money call at the $7 range. Now, whether it reaches $7, you're not really worried about that. What you're doing is you're covering, if you really want to retain the stock, you're not getting hit for any of it, and you're collecting all that premium on the downside. It's effectively being short while owning it, and you end up with a net zero. My preference is also to be owning a put at a higher strike, but that's a little bit more complex construct that provides you the ability to be double short while still holding a stock, and it prevents some of that active trading where if you need to hold something to avoid capital gain setups and that gets into tax issues, and you have to talk to your accountant about that one. But you can see you haven't produced the buy signal, but within the deep red here on the 78 minute, so you would expect that is not going to produce a whole lot. Though we got earnings coming in a couple of days, that could be a very interesting play given where it's at. But it's funny, you have $5 targets from some of these major brokerages, and it's interesting how it's held up despite some of those. So it's interesting. Now, we talked about JCP on the little decline, fading, getting oversold without really losing any price. We saw that as potential attractive, and boom, skyrocket there, but all positive extremes, so those will end up getting retraced here coming forward. And then looking at our lovely 50K. So we knew this was a bad setup. We knew this was a bad setup. What was interesting is when this one turned around, we just expected the lows to be retested. So you got the lower lows on higher extreme. This one became much more attractive and looks to have much greater potential because you have the higher red, lower peaks. You see this? So it's making a higher move there. The green is also doing the same thing. You also had the crossover here, move the cyan above, and you're no longer in the deep red. So you're not worried about that construct. Now you need to see the follow through of the green with the cyan, but you also moved into a new zone of the red moving higher. So this is all good right here from this construct. So we may potentially see a little bit carry through on that one. I like the way that looked. Oftentimes what will happen with this setup, though, is it gets overbought a little bit quickly. The key will be when it reaches the 0 point, whether it rolls over or is able to break through at that point, because that become an interesting opportunity to sell and short again. We'll have to see how it plays out. Let's look at some intraday. Turning to the 5K, it was just a really pretty day to work with. We came through here, put in the deep red, had a little bit of the divergent run, which means that once we got these lovely little DOC setups, which we describe as the cyan moving above after the red white, and I particularly love it when the red white is over 0 and they start their rollover. The green usually begins it with the crossover below, and I particularly love it if the green dips below the cyan at the same point. If I look at it right about there, aggressive traders will have seen this crossing below right there and taken it a little bit earlier than that. And then you look for that continuation of the cyan for follow through dip, and sure enough, the cascade begun. And once it began, got the deep red, and so when this little pop came here, wasn't all that exciting. Looked like it was going to transition right here when we had the nice green, but quickly it flipped over to the negative side of it, creating a sloppy version of what a spider would look like, which is usually the clean, sharper one like this. And boom, collapse again. And then we got the nice little retrace here of the lows on higher extremes, and nice buildup of the setup here after it had retraced. Now, what I like to look for in this particular case is when you get this rise of the red white, these are for the indicator subscribers, I look for if the green doesn't dip below when you come into this penetration, and then you get your next up pivot, and you can follow that up pivot and you can see the green. Even though it suffered a little bit of the retrace right there, that was a beautiful signal. And now looks like it's getting into a little bit of an extreme setup here within the after hours. What is it, up 4.5 already? So that's likely to retrace back into some of that, which would give a new opportunity there. We could look at a couple of alert stocks real fast. Scroll through some of these that were easy. A lot of people gave me flack. They didn't understand. It's like, I went through Facebook still being lower. I think most of these were negative constructs, all within sell signals. Sure, some of them rebounded, but you get that within short setups. Piece of cake with some of those within the sell constructs. Even though they come and they violate and they go up a little higher, you just have to wait a day or two, and that's all it tends to be. These are all have been in the sell, so there's been no real shock with any of this. PCLN has been just a beautiful run to the negative side since right over here when we first noticed this was moving divergent to the move. You ended up with a very clean sell within that configuration. It confirmed it the next day, but still popped higher, looked devastatingly tough. And then, when you talk about that, you're looking at going from 1230 to 1130. It's 100 points, and it's even dropped as low as 1100 on that. So this is not complicated at all, but it shocks me that more people will invest in like the Twitter alerts or something like that for $40. The whole idea, or euros, is the whole idea of that is just to get you interested in the fact that these algorithms have the power. You have to want to move up and beyond into having the indicators for yourself in order to really effectively utilize some of this stuff to a point of being a serious trader. I mean, that's for people who really want to consider doing it as a full-time occupation. It's not impossible at all. Nice from Amazon, the dip, and then Apple with its buy off of that surprising jump continued with the buy, and we talked about this even the other day. It's like, okay, fine, it was the short, but caught a bunch of the algorithms off guard. Everything flipped to the upside, and when you get that kind of freak out, they have to take it the other direction to make up for their losses. And sure enough, a bunch of people wanted to short into that. It's like, no, that's clearly a buy. There's nothing about this is not a buy at all, and explosion. So don't want to run long. As always, look for me on private Twitter feed, Stock Twits. Be sending out indicators to indicator subscribers, hopefully a little later before the market actually opens. So you may even have them before this begins. That way there's no interruption for when the month ends in the middle of the week here. We'll talk again tomorrow. Trade well.